Welcome back. Now to our next conversation. Well, see, global stock markets closed out 2021 with double-digit gains for the third year in a row as easy monetary policy, a flood of fiscal stimulus helped propel an economic recovery from the pandemic. Well, bringing it down here to Nigeria, the equities market was quite positive in 2021. Now let's get an outlook for investment strategies in 2022 with Mr. Ayodeji Ebo, Head Retail Investment at Chapel Hill, Danham. Great to have you. Happy New Year.
Good morning and Happy New Year to you, to
Good morning.
everyone.
Good morning. Well, 2021, quite an interesting, year for markets. But what would be your proposed investment strategy for investors, coming into 2022?
Okay, thanks. I think the first thing for investors to understand is they'll need to first set an objective for themselves. And beyond that, you also need to understand your risk appetite. So once you have those understanding, then you can now craft a portfolio. So in terms of the strategy, we'll be pushing more for investment in corporate issuances because of the low interest rates in the federal government instruments. So for instance, rather than invest much in treasury bills, we can look at commercial papers that come with higher premium. Yes, it carries a bit of higher risk, but you also look at the names of the companies that are issuing it before you also invest. Beyond that, in the earlier segment, you spoke about your FX. So it's also very important for investors to look at their exposure to dollar investments, maybe in the form of dollar mutual funds, US, or I'll say foreign stocks, those with strong fundamentals, as well as Eurobond. This will also help them hedge their investment or their savings against imported inflation, as well as any depreciation or devaluation of the naira. So by and large, investors need to be deliberate. I think I missed out even for the Nigerian stocks. We still know that there are some sectors that we believe that will perform well in 2022, especially you look at the financial services sector, you look at the telecom sector, and the industrial goods sector. We believe that they will still be able to weather the storm, despite that we are in a pre-election year.
All right, you talked about inflation rate, but how can investors reduce the impact on their savings and investment? We see the World Bank, they're projecting, Nigeria's inflation rate will be the highest globally this year.
Okay, thanks. I think one thing that I've noticed based on my frequent interaction with investors is that doing nothing makes you worse off. So you need to also always take that into consideration. So inflation rate as at November is around 15.4% year on year. So rather than leaving your money in your savings account or just leaving it without any interest, it is important that you look for investments that will give you a bit of return to close that gap. So putting that into perspective, bills, yes, may be very low. Around 1 year treasury is around 5.4%, but it is around, let's say, sub 9 or 10%. So if you if you invest in those instruments, or you also look at stocks that give dividend yield of almost up to 10 double-digit dividend yield, so that will bridge the gap. So for investors, the focus should be on how do you want to reduce the impact of inflation on your savings or your investment? Because if you don't invest to even earn 5 or 6%, that 15% will reduce your purchasing power for your savings or for your investments. You have the impact of devaluation, impact of depreciation. So you need to be very deliberate on how you want to hedge yourself against all these potential impact on your savings and investments.
All right, talking about hedging now, what are the options available?
Okay, thanks. So I'll start with the dollar investment. It's very important that given the situation in Nigeria, you need to be exposed to dollars. So when I say exposure to dollars, you have the dollar mutual funds that has the entry of between $100 and $1,000. It means you can set aside on a monthly basis or periodically invest in dollar mutual fund. You also have the euro bonds, though that have a very high entry level. For some investment outfit between $50,000 to $200,000. You can also look at US stocks. There are stocks that have been able to weather the storm. You look at their past performance in the last 5 years, and if you don't want to be specific, even investing in stocks, there are ETFs that you can exchange traded funds that tracks different stocks and you can invest in them. Now, coming back to Naira investment, you look at money market investment and fixed income mutual funds. They also give impressive return. And like I mentioned earlier, rather than putting most of your fund in treasury bills, commercial paper, we expect that there will be more corporate insurances in this first quarter, given the low interest rate environment, which is positive for the issuer. So investors should position in those stocks in the first quarter of this year. Beyond that, also looking at equities, there are stocks that when you look at their dividend yield, which is like a pessimistic scenario, minimum you get the dividend, they are almost at 10% dividend yield. So when you also invest in those stocks, it also gives you that potential to reduce the impact. And lastly, the alternative investments. Yes, it's high risk, it requires a lot of due diligence. So you may either want to go in through the mutual fund, there are funds, there are real estate funds, there are infrastructure funds that you can invest in that also delivers above inflation return. You also look at the likes of crypto, though it's currently not allowed in Nigeria, but you can look at different other classes of assets that can help you to hedge against the impact of inflation.
Yeah, talking about crypto, there a lot of people have talked about Bitcoin, being a hedge for inflation, but you know how volatile that market can actually be. But what is the best portfolio mix right now going into 2022?
Okay, thanks. I would first like to state that it differs across investors. Objective differs, risk appetite differ. In terms of the available fund, investment horizon also differ. So you will need to craft or work with your portfolio manager or a professional investment advisor to guide you. But talking generally, the exposure, you should get exposed to money market investments. I would say between 40 to 50%. You can also look at dollar investment, about 30% of your portfolio, and maybe about 20% to equities. Then you can put about 10% to alternative assets because of the high risks that they carry. And beyond that, in terms of the crypto market, when it's really very volatile and investors need to understand the risk involved. Some, if you don't have that time to invest in particular coins, you can also look at the funds or the funds that track those coins. Beyond that, there are potential, based on what is the current discussion around the metaverse coins. These are potential coins that has growth for the future. Yeah, this is not like a recommendation, but you also need to carry out your due diligence based on your understanding. But we believe that based on what we've seen in 2021, where we've already seen known companies, top investment banks setting up funds around crypto. So we believe that, at least for now, crypto is here to stay, and there's still potential for growth.
Right, and narrowing down now to fixed income, what's your outlook for the fixed income market, and what should investors be doing in that market?
Okay, thanks. We expect that where the fixed income market interest rates would increase uh, uh, from, let's say, from the second to third quarter of this year. And the reasons are, one, government is expected we expect government to front load their borrowing. When you look at the budget, you will see that gap. One major factor that may just be a setback is the liquidity we're expecting in January. It's about over 800 billion naira will mature in January, and that would reduce that impact. But notwithstanding, 2022 is a pre-election year. We expect a lot of volatility, which presents opportunities for traders. And for most retail investors, would propose that most people should focus on identifying commercial papers issued by corporates, known corporates, and they should also be mindful of the rating of those corporates. With the low interest rate environment, the corporate issuances should increase this year, so we expect that they should be positioning. Interest rate is expected to increase. We would see maybe before the end of the year, CBN may also want to increase the OMO rate. When you look at last year, what changed again within the fixed income market was the increase in the OMO rate in February from about 5% to about 10.1%. So we expect that with the expected hike in the global space, if that is implemented, then we would see that our CBN would also follow that trend, which would mean that that will be higher interest rate environment. So by and large, investors should keep as much liquidity as possible to take advantage of opportunities as they present themselves.
All right. And on the equities market side, what are your top sectors in 2022, and what strategy do you recommend for the equities market?
Okay, thanks. The first strategy on the equity market is to look at stocks that have consistent high dividend yield. So when you look at the past 3-4 years, those that have been consistent, you can take position in them. So you also want to look at sectors. So you look at the telecommunication sector. Despite the challenges in 2020 and 2021, they have continued to grow at a very impressive rate. In financial services, yes, we experienced a slowdown in 2021, which I feel will give them a strong lower base to move in 2020 and 2022. So the only downside risk that we see within the equities market is because of the election. And if the high interest rate environment persists, would also reduce interest within the equities market. So we are not significantly overweight in the equities. Just identify stocks that has potential for good dividend. And if you also have that long-term perspective, there will be opportunities even as we approach the election. When you see the dip, just take positions with the mindset that maybe next by 2024, when the post is clearer, when we know the new government, the policy direction, then we will begin to see traction in the equities markets.
All right, talking about identifying, good investments, and stocks, the knowledge, investment gap is still very wide. How can this, gap be improved?
Okay, thanks. I think the first